Hey traders, Raghee here. Welcome to Charts and Coffee for Wednesday, June 9. Great to see everybody. All right, so let's actually just get to it. Let's get the charts that I want to use up. There we go, up and running. Okay, hope everyone's doing well. Let's take a look at what is on your mind this morning. Good morning. Good morning. Great question to kick this off with. All right. So the first question here is, do I use Darvis in my intraday trading? So PH, thank you for the question. And the answer is a resounding absolutely. And I'll be doing, it's a great time to mention, I'll be doing a webinar next Wednesday, the 16th at 8 p.m. And I'll be walking you all through it. But let me give you an idea of what we're talking about. So here's a chart of crude oil. And it doesn't matter if it's crude oil, if it's Apple, if it's this SPY ETF, or the S&P futures. I was just talking to my partner here in the office, and she said, what are those 4 factors that you talk about again when it comes to trading? And I thought, oh, what a great question, because it's always price, right? Price is always first. But then a lot of people just stop there. We have to also look at volatility, volume, and time. So you put those 4 together and you add a price tool like Darvis to your trading. And you can see the Darvis here. One of the things we've done, and I'll talk more about it next Wednesday, is we've actually built a signal into the Darvis to identify the patterns that occur within the box. So the answer is yes. And not only do we use it, we've updated it because we call it Darvis 2.0. Because I always want to give credit where credit is due. That seems to be something that just isn't done anymore, right? I love the fact that I'm using something that was created and tested for the past 6 decades. But then we took what was working really well then, and we tweaked it to adapt to the differences in the market now. And so, yeah, absolutely do I use Darvis, but I don't use it in the original Nicholas Darvis sense of the 1950s and 1960s. I use that as the building blocks, and we've tweaked it to make it work for the kind of markets we're dealing with today. So thank you for the question. Great question. I'm a huge Darvis fan, and I'm turning around looking at my bookshelf. Where is it? I've got a number. See, most people read the first Darvis book, the $2 million book. But there are about 3 or 4 different books that Darvis has written, and that one's probably the least instructive, although it's a great book. There are quite a few Darvis books that have influenced what I do with those levels. So thank you for the question. All right, moving on. Any thoughts on, hey there, Alex, any thoughts on Caterpillar? Sure. So let's open up the chart on CAT. All right, so the question, I'm looking at multiple squeezes. Look, the squeeze is the flagship indicator of Simpler, and that's great. Quick story. When I first, and I didn't even meet him, I don't think, on that first visit, but this would have been right around the time that my first book was being published. And it might have been a year or so before that. So let's say 2000, oh gosh, maybe even way before. But anyways, this would have been in the early 2000s. This was before Simpler Trading, any of this stuff. And John had flown down to a group that I used to speak to a lot in Fort Lauderdale and gave a talk on the squeeze. This was before we had the squeeze indicator. This was just back in the old days of Bollinger Band and Keltner channels and, watching. So I was programmed to look at those lines. And that's the way that I learned this decoding of breakouts, which is really what John was able to do. He decoded the breakout. He was able to see the sort of, I like to call it the, what's that game with the music? Oh, musical chairs. The game of musical chairs, that sadistic game that parents created for children to entertain themselves. The musical chair game, right? When the music stops, everyone's got to sit down. Momentum trading is a lot like that. If you could have a little bit of heads up before the music starts, you'd always have a little bit of an advantage, right? So that's really what I realized that the squeeze was. But I also realized the squeeze, the name, isn't just the way in which the Bollinger Bands and Keltner channels um, interact. For me, it took another, based on the tools that I use, right? It took another kind of clarity, right? And that clarity that I needed was to see that the markets were indeed in a range. So what I started looking at was this kind of, you see what's in there? Those of you that are familiar with my grab candles, GRAB, which simply stands for green, red, and blue, my grab candles go neutral. Blue is neutral. Blue is the precursor for me for the best squeezes. Blue is the market has gone neutral. It's stuck in a range. It's being compressed. It's consolidating. It's accumulating, whatever the verbiage is that you want to use. But I look at that as the precursor to a potential breakout. So, that's the way I would look at it. So let's jump on over to CAT. Take that same idea. All right. That was on crude oil, by the way. It doesn't matter the market. Let's look at the same thing on CAT. So do I have that kind of setup? That would occur here for me, right? So remember, every indicator that we have, it's going to always have an opinion. So our job as traders is to look at all the tools that we have and say, all right, A, whose opinion am I going to pay attention to? That goes to the precursor to every trading strategy, which is Dow Theory 101, which is what is the underlying market environment that we are in? And then I can get into, is this a compressed market? And then that's the way that I do it. Now, there's so many ways to execute ideas using indicators. I'm just going to show you the one that I use to do it. And I'm looking for a very specific pattern with blue grab candles. So in this case, CAT, my friend, CAT's a great pullback buy. You can see my Darvis signals firing off here just as it did last time. Right in the wave, right here, buy. Here, buy. Here. So you know what I'm going to say? Just keep an eye on the larger, the tide within CAT. In other words, where is CAT heavily weighted within the passive investing universe of ETFs? Take a look at that tide. Take a look at whether or not CAT is a relative outperformer. But I like CAT very much. CAT's been on the radar, and you can see the last, well, even back in here, buy. Well, for those who may not be able to see those tiny little arrows, buy, buy, buy. And that's a combination of the structure of the market. That's my wave. That's a combination of the green grab candles. Look at how we're just green, 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 green. Little bit of neutral, little bit of neutral. I mean, everything about the grab candles are telling you this is very much a bullish market and buyable on the pullbacks, which is the way that I like to trade. And then the pullbacks are identified here. And we're getting that same trigger signal, if you will, right now. So the answer is a resounding yes. I just won't look at it on the daily time frame anyways as a squeeze, because I'm quite literally not getting the compression, the squeeze that I want to see for me as a precursor to that amazing signal. All right, so XLV and PFE, are they still valid? So remember, we'll talk about a market that's being compressed right now. So the overall market is, again, look at all the green grab candles, right? Green, 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 green. That's indicating the environment that I'm in. That means that I want to be a bull. I want to be a buyer. I am bullish, right? So this is, for me, a precursor to a breakout. So as long as we're stuck in this range, irritating, yes. Damaging, no. Pfizer is another market that we're in, and you can see here also. So this is probably a little bit more indicative of that compression that I would like to see. But the bigger thing here is on a technical breakdown of what's going on in healthcare. The bigger conversation here is the fact that we don't know when it's going to be released, but we've got a decision from the High Court on the ACA. Again, someone told me it's the third time. I've heard it's the seventh time. Doesn't matter, but we've seen this merry-go-round of conversation. Every time there's a conversation about the ACA and the High Court, and that's happened many, many times, whether the High Court is making a decision on it or not. I think the case for those of you that are kind of geeks, it's California versus Texas, which is, I believe, the case that the Supreme Court is hearing. But this has kind of been a merry-go-round of many, many times. And I have generally faded each one of those headlines, if you will. So we're going to have a little bit more volatility in the anticipation and the waiting for the decision. And this one's considered a pretty big one in terms of, maybe the last ditch effort to unring the ACA bell. So there is some news. There is a narrative beyond what's on the screen, beyond on the price action for Pfizer and for healthcare. And that's what it is right there. As far as corn goes, hey there, David. Yeah, I mean, look, our reflation trade of corn, a reflation trade of beans, reflation trade on bean oil, and even if you want to throw the meats in there, specifically lean hogs, are all valid. It's also affecting deer, Archer Daniel Midland, and the aforementioned cat. But are we at levels in beans or corn that I can do it, that I want to do anything with? Not quite. I like the long trade, but for me, I want a more significant pullback in zones where I think are more likely to be exhaustive, and I'm just not there at an exhaustive level yet. Remember, if we're aggressive, too aggressive on a pullback, meaning we're okay with a shallow pullback. Now, I love the green grab candles telling me, hey, buy. And then we actually have not just the grab candles, right? But then we actually sync up the JT multi to help us even further confirm a little bit more nuance of the trend. So identifying the trend and the quality of the trend isn't just the color-coded candles, which I've been using for over 2 decades. This is how I decoded Dow theory early in my career, using the 34-period exponential moving average and color-coded candles around that. And we've been giving this is a tool that's been free forever. It's free on TradingView, Thinkorswim, TradeStation. If you go into the indicator store in TradingView and in TradeStation, you'll see GRAB, G-R-A-B, candles available. And then what we've also done over time is try to make it even more clear about the quality of the bullishness or the bearishness, with a little bit more reliance on shorter term EMAs, not just the 34. But you put all that together and you see, if we're going back and forth between yellow and green, yeah, I want to be a buyer. So is there a blue light special coming up? Well, the telltale Darvis says yes. The 21-period exponential moving average there, the green dots, say yes. And the wave says, well, don't forget about me, because you can buy down in here too. So yes, I am quite bullish on FXC. We're getting bullish on Freeport-McMoRan, which is FCX, and we're bullish on currencies, FXC. Love the FXC. And by the way, if you haven't already, you can head on over to the Simpler Trading YouTube channel. Some of you are probably on that right now watching Charts and Coffee. Last night's free Simpler Futures update was on currencies. The 3 currencies that I'm watching, the 3 ways that I'm shorting the US dollar and Canadian dollar, well, 6C, but FXC is fine, is one of the ways that I'm doing it. This is one of the best ways. This currency is actually one of the best ways to take advantage of the reflation trade, the strength in commodities, which is a similar narrative, and then also the weakness in the US dollar. So love that FXC. By the way, we love FCX too. That's actually in many ways reflation trade too, tethered to copper, nice uptrend, great structure. Start with structure. Start with, what are the color of my candles? Green, red, or blue? Green bullish, red bearish, blue neutral. What type of market strategy are you using? One that's going to benefit from bullishness, one that's going to benefit from a neutral market getting ready to expand, or a downtrend, a bearish market. And then you can take the next look, a much more, I think, helpful look, which is a historical look at the 4 moving averages. And I do this intraday too. 4 moving averages that give you a really good insight into not just the trend, which is the lower row, but also the sentiment and the momentum. So I've been using color-coded tools for a really long time, because It's far easier to find clarity when you've taken a lot of the subjectivity of the analysis, in this case, the trend analysis, out. What's the color? So that's the grab candles. Thanks for the question. Any thoughts on XLF? Sure. Really bullish. Two things about XLF that are pretty exciting. One, it's been the relative outperforming sector, really amongst many, many sectors in the broader averages. It's the relative outperforming sector within the S&P, for sure. And we are now, if you can believe it, it seems like we just finished earnings season, but we are just under 6 weeks out from the earnings season, just grinding up or winding up again. And what that means is we are in the 642 window. Now, if you haven't ever done 642 earnings type approach, it's really just taking advantage of bullish structured markets, could be stocks, could be the sector, in front of earnings, but not days in front of earnings. I could care less about setups inside of 2 weeks. What I'm talking about is what I feel is the best, more predictable, and more risk controlled part of earnings, which isn't collecting credit in the high IV environment or trading through the earnings event itself. I do that very rarely. Those are shockwave trades that I don't think occur that often, and they are higher risk. What I think is lower risk, and quite frankly easier, is to trend follow in that window. So if you don't know what 642, the 642 earnings window is, countdowntrader.com has 2, if not 3 different explainers on that process, including video over there. And by the way, the most recent update is an inside look at my chart. So if you head on over to countdowntrader.com, scroll, I think, to the 3rd or 4th page of updates on the page. You can go down and look at the old updates, the older updates. 642, I think, is on the 3rd or 4th page. And questions about what's on my chart, the indicators on my chart, that's actually this week's update. So check it out. And so, yes, I like XLF, but even more so because we're in that 642. All right. Okay, next up, can I take a look at FSLY? FSLY had some news around it. It's not been a great structured market. So think about it this way. Of all the things that I could be focused on in this market, do I want to look for bottoming patterns, or do I want to find markets that have just generally been relative outperformers? So FSLY doesn't end up on my radar because it's a market that's trying to break a downtrend. I mean, you don't find red. This is a downtrend here. Look at all this double red here, right? That's a downtrend that's trying to stage some sort of reversal. I don't know if it's ultimately going to be a down 1, 2, 3 following this move lower or not. But I'm not really interested in the move. It probably got a lot of attention because of the candle, right? The news for the candle. But of all the things I could look at, Martin, I'll be straight up. This one, not Martin, sorry. Who asked me about FSLY? Neil. Yeah, Neil, I'm almost 0% interested in a laggard market in an environment where I can find plenty of double green. And why do I focus on the double green? Why are the grab candles and then the grab candle supplement down here, the JT multi-trend? Why is that so important? Because if you think about why 2020 was so great for many, many traders, it was because the double greens were abundant. So what I say is find the corners of the market in 2021 that look like 2020, and you're going to find, to a certain degree, the same kind of success and ease that you had in 2020. So this is not, for me, something I would look at. Could be a 1, 2, 3 bottom, but not there yet. All right. So yeah, respect the trend that was. Everything I talk about, gang, is going to be a conversation about trend. It's going to be a conversation about market structure. Is the arrow? No. PSW, it's going to be included with my next class, though. So just join me on the 16th. We'll explain what the new class is going to be about, what indicators are included. But no, the new update, I've given away the grab and the wave and the propulsion and the original Darvis tool for years, I think since 2016 or 17, with those 4 tools bundled up. But no, the new update is not. It's going to be it's a premium tool, one of my few. So, but you can learn more about it and how you can get it included with the class coming up. All right, so I got to wrap. Gonna make it a wrap here. I'll be in the Sector Secrets room in just a moment. We're gonna go over current trades, new setups, as well as whatever questions you might have, and then I'll be in the futures room and the options room later today for the close. All right. Thanks as always for joining me for Charts and Coffee. I will see you all tomorrow, same time, same station. Be good to each other.